Hello, good evening. Welcome to our seventh edition of Fireside Chat. For today's session, we have with us Mr. Nilesh Shah. Nilesh Shah doesn't need an introduction. उनका नाम ही काफी है. The Amitabh Bachchan and the Sachin Tendulkar of the mutual fund industry, a great story weaver who can explain the most complicated topic in the simplest way possible. Please join me in welcoming Mr. Nilesh Shah. Thank you, sir, for giving us your time and this opportunity. For folks on this call who are not from this industry, Nilesh is the Group President and Managing Director of Kotak Asset Management Company with prior experience in ICICI and Franklin Templeton Mutual Fund. Under his leadership, Kotak and all the other fund houses which he has led have won the Best Fund House of the Year award. Nilesh is a part-time member of the Economic Advisory Council to the Prime Minister. He is a part-time member of the UIDAI. He is a member of the Insurance Advisory Council as well. He is a member of the PFRDA Committee for Decision Making on the Investments of the Unified Pension Scheme. He's also a SEBI committee member, and last but not the least, a member of the Association of the Mutual Funds of India. So let's begin this session quickly, and let me hand over to Amitabh.
Hi, good evening. Indeed, a great pleasure to have Nilesh Bhai on the session with us. Clearly, each of these sessions, we have been talking about market, we have been talking about many things, but it would be inappropriate for me to start talking with that. And what I will do, I'll quickly turn the spotlight on Nilesh Bhai and start with an opening question, with his opening comments, as well as I've observed you to be a very big supporter of the India story. With all the recent things which have been happening over the last year or so, do you think it continuing to grow? Do you think it's a little dented? Your opening comments.
So Amitabh bhai, thank you for having me over here. मेरे पास कोई दूसरा देश है नहीं कि मैं बाकी देशों की प्रेज करना चालू कर दूं और अपने देश को नीचा दिखाना चालू कर दूं। जैसी भी है, भारत माँ मेरी माँ है, मेरे लिए वही सबसे अच्छी है। Second, India is combination of Indians. What we do will determine what India does. Now, our story, if we feel defeated, is obviously dented. But if all Indians come together, then how can our story be dented? For 1800 years, despite colonization, despite repeated invasion, India was number one or number two economy in the world. 200 years of colonization was brutal. That brought down our growth rate to 0% for almost 200 years because Britishers kept on losing. Now we are trying to go back to where we belonged. Over the centuries where we were, now we are trying to go back. So our story is dented only if we have accepted defeat. Our story is continuing as long as we are all working hard.
Absolutely agree. And I think that's a great way to start this discussion. And I'm sure all of us and everybody on this call, we have a lot of luminaries on this call in their own lines of business. It is a time where everybody is striving ahead. If we move to the markets, from a risks, maybe we'll work on the opportunities in just a minute. From a risks perspective, what are the key risks which you see the Indian market is facing at the moment?
So one key risk, or the only key risk for India, is performance according to the valuation we are demanding. Today, it's visible that FPIs are selling. They are selling because for last 5 quarters, our earnings growth is in single digit, but our valuation is in double digit at premium to others. If you are Rohit Sharma, Virat Kohli, Sachin Tendulkar, you are not supposed to score 20, 30 runs. You are supposed to give a winning knock. You are supposed to hit a century. Then only you can retain that premium valuation. Over last 1.5 year, our earnings growth has slowed down, and hence markets have given negative return. If we regain our earnings growth to double digit better than our peers, I have no doubt in my mind that investors will come back and markets will reward investors.
Fair. So if you look at your assessment of the market in terms of investors who are coming in today or who have invested, which pockets of the market after a correction of over a year, year and a half, provide value or provide an opportunity for people to come in, whether in lump sum or in staggered? So where do you see people should be looking at this point of time?
So, despite 1 year's underperformance and correction, our markets are around historical averages. We were trading at a premium to historical averages, but we failed to deliver earnings growth. And despite 1 year's underperformance, we are still at historical valuation or around it. Now, today, our economy is adversely impacted by US tariff. Sectors like textiles, gem and jewelry, aquaculture, which employ large number of people, will get impacted by adverse impact of US tariff. When US charges 19% to others and 25% to us, 6% is manageable. But at 50% tariff, it's an embargo. It will have consequences. And which is why our markets today is underperforming. Now, if you are going to take next 1 year, there will be probably still underperformance unless until this tariff gets adjusted quickly. But if you are looking at a 5-year view, then I still believe our growth story remains intact. So you need to invest over next 1 year for next 5 years, not over next 5 years for next 1 year. The government, courtesy the shock of the adverse US tariff, is now stimulating domestic economy. In the budget, 1 lakh crore rebate was given to taxpayers. That's annually reoccurring. In the GST for FY26, 50,000 crore benefit is given to consumers. But actually, Amitabh Bhai, it is 1 lakh crore because another 50,000 crore is taken from the pocket of people like you and me. It's a slightly higher burden, but that's not going to stop my spending. I'm not going to tell my wife, please don't spend because GST has moved higher for us. So to me, that rebate is 1 lakh crore to the bottom of the pyramid consumers. There has been interest rate cut by RBI and our loan interest rates have come down. That's about 1,20,000 crore benefits to the EMI payers. There is 8th pay commission coming into play in 2027. That will be, a couple of tens of thousands of crore to central government employees first, then state government, and then local government. On top of it, government banned gaming recently. Now, as per the UPI monthly data, about 10,000 crore a month was going to gaming companies. Of course, of that, something might be paid back to the players, but a large portion was retained by gaming companies and their investors. Now, that will also leave more money in the pockets of the so-called quick money addicts who wanted to become rich overnight by playing games. There's talk about weekly option expiry getting restricted or shut. We all know how retail speculators lose money on FNO. That's another quick money addiction to become rich overnight by trading in FNO. So there will be more money in the pockets of taxpayers, consumers, EMI payers, government employees at central, state, local level, and quick money addicts doing gaming and FNO trading. This money will be spent or saved somewhere. It's unlikely that this money is going to go towards roti kapda because most people are meeting those basic necessities. And they're not going to be substantial enough to go and buy a house. So, in our assumption, this money is going to be spent on experiences and discretionary spend. It could be hotel. Instead of eating at home, we may take family out to a restaurant. It could be travel. Instead of taking vacation at a relative's house, we may go for a pilgrimage or a holiday destination. It could be spent on airline. Instead of railway travel, we'll do airline travel. It could be spent on home improvement. Everyone would like to live more comfortable. So tiles, paints, and those kind of things, furniture, fixture could go up. The more important thing is that this money should be spent in India, which is why Prime Minister is requesting citizens to adopt Swadeshi. If this money is spent on buying iPhones and traveling abroad to Thailand and Singapore and Vietnam, then there will be no benefit to Indian economy. But we believe citizens of India will respond to Swadeshi movement. And hence, consumer discretionary space should outperform the market in the days to come.
Right, right. No, clearly, I think there is a lot which is being happening in order to mitigate some of the shocks which have been experienced by the market or by the economy over the last year or so. We have often talked about equities, but there are also commodities, gold and silver, which have been doing well. Do you see them also as pockets where more money will continue to flow in?
Undoubtedly, yes. We have been bullish gold since 2020. And despite a negative return in 2021, we held on to our view. We doubled down on our positive view on gold in 2022 when Russian foreign exchange reserves were confiscated by Western world and interest on the same reserve was paid to Ukraine. And now there is talk about giving those reserves to Ukraine for rebuilding. After that episode, undoubtedly, every central bank around the world would like to diversify their FX reserves in gold and other metals. This single buying by central banks around the world is pulling gold prices higher. And with policy, I doubt there will be any central banker or government in the world which will not think about adding gold. The world doesn't produce enough gold to give to Indian housewife and central bankers around the world. In silver, our view turned positive about 8 months ago. That was purely industrial demand and supply. The demand for silver was increasing thanks to electric vehicle and solar panel. The supply was restricted, mining costs were increasing, and at around 38 or $35 on an ounce on silver, we went bullish. Now we are doubling down on silver because Saudi Central Bank bought some silver ETF. As gold prices go higher, some central banks may move to buy silver. Again, there is not enough silver to meet demand of consumers, industrial users, and central bankers. There are people talking about both gold and silver prices going higher. We will continue to observe central bank buying. And as long as they are buying gold and silver, both metals should go higher. we recommend up to 20% portfolio allocation to precious metal. And now, yesterday I read BlackRock, Morgan Stanley, and such other giant global firms have also started recommending their customers to invest in precious metal. If their follow-up buying comes through, then we are looking at a different orbit of gold and silver prices.
Fair. I think the clearly as the adage is that always there are opportunities which are there where some parts of the market may go down, some part of the market go up, and clearly this is an area which is looking extremely promising at this stage. Uh, very briefly looking at the rupee, especially again, you did cover around the US shock on tariffs. IT sector is one of the areas which has faced a brunt of it. Pharmaceuticals had some amount of maybe direct, maybe indirect, because branded, patented. The jury is still out. How much does it impact India? But do you see the rupee also depreciating at this point of time a lot more, or do you think it's a more temporary phase and then it'll find its step somewhere?
Amitabh, in my opinion, rupee's destiny is to depreciate. Our inflation remains higher than our peer group, and our productivity remains lower than our trade partners. If rupee has to appreciate, inflation should be lower than trade partners. Productivity should be higher than trade partners. At least in the near term, that is not visible. That being the case, rupee's destiny is to depreciate. We do have $700 billion reserves to absorb volatility, but eventually rupee will have to depreciate. In the past, rupee depreciated at high single digit, let's say 5 to or around 7-8%. Then it started depreciating at mid single digit, 4 to 5%. Now we think depreciation will be at low single digit, 2 to 3% every year. But this depreciation won't be linear. It will be step and a ladder. So we'll have to live with it. But in your mind, do remember that one day rupee will go into triple digit.
Fair. And I think that that's a very fair comment that the depreciation is here to stay. But probably low single digit is what would be the long term averages if you look at from here 3 5 years forward. Short term, it can move anywhere with so
Yeah.
much of things happening. Uh, moving gears a little bit, you have been associated with the wealth industry for a very, very long time. And how do you see this space evolving? Because a lot of changes have happened in the last 10 years or more, and it is poised for a lot of leap forward as well. So, how do you see this industry shaping up?
So, Mitam, by no matter what an investor might be, HNI, ultra HNI, middle class, lower middle class, poor, they all are human beings. They have their emotions. We fluctuate between greed and fear. And after spending 3 decades lecturing people not to be greedy and not to be fearful, I myself is not immune to it. अपने को भी डर लगता है, लालच होती है. Now, which is the best way to control that? गुजराती में कहावत है, पारकी माँ कान विंधे. If a girl has to pierce her ear, it's not your own mother, it's someone else. So everyone needs that someone else who can pierce our ear so that we remain on the middle ground between greed and fear. And that is the job of the wealth manager. We have seen people committing errors of both omission and commission. Fear does not allow them to invest, and greed forces them to chase momentum. Both are injurious to their financial health. And which is why it's always important to have someone else whom you can trust, whom you can rely upon, and who can provide a dispassionate view.
Fair, fair. Maybe one last question before we move to the other segment of our discussion. Meanwhile, just to everybody, if anybody has any questions, please feel free to put it on chat. We will have a segment for question and answer, but please keep sharing it with Prerna and others on the team. Uh, Before I move to the next section, one last question in terms of from a Kotak's perspective, with all these changes which are happening, a lot of things which you spoke about, how is Kotak gearing towards adapting these best practices in their own offerings to our clients?
So our core principle remains very simple. Kotak should be the most trustworthy asset management company in India. Amitabh Bhai, you very well know, trust is built over decades of work and can be lost in a second. Our job is to ensure that no matter what we do as a company, we are adding to the trust which our customers has placed with us. Now, in some sense, trust is built over the decades by giving right product, right solution to your client. We started with mutual funds, then came PMS, then came AIF. Now SIF will be coming. Apart from giving right products, we have to give right value add. If my funds underperform benchmark indices, that's not appropriate. I don't justify my fees. Now we have sizes. So generating outperformance every day will be difficult. But over a cycle, I must add value to my customer. Many years ago, in the TMT bubble, I was managing small equity fund and we lost money. And one customer told me that, Nilesh bhai, you should not make those mistakes which I can make myself. You should make those mistakes which I am not capable of committing. It was a very valuable advice and I have carried to my heart till today. We have to invest in real businesses. We have to invest in a disciplined manner. And we must outperform benchmark indices over a cycle or give explanation why we have underperformed. And that should convince my investors that I'm still doing the right thing. Finally, after right product and right performance, we have to do right sell or right advice. We run asset allocation funds, but we also advise and interact with customers on programs like this to suggest appropriate allocation. Do we always go right? Of course, no. In our gold call over last 5 years, we have gone wrong in 2021 when gold delivered negative return. So your calls do go right, sometimes do go wrong sometimes, but the investor must feel confident that the call they have given was to the best of their ability. There was no manipulation. Client first is the policy which we have to follow. Right and rights. These are the three things constantly period of time to build that trust and confidence.
Right. No, and clearly Kotak has been able to do, in our experience as well, a lot of good work, and a lot of clients have benefited from products from Kotak. Of course, the fund managers are very accessible, and thanks to you also participating in this session, it does help and bring the face of Kotak to all our valued customers. What we will do now, we'll try and make it a little bit more fun and have a quick 5-6 minute segment of rapid fire. Let's see
Nilesh
how
bhai,
you.
there's no hamper but in this.
So,
I am a Gucci bhai, so I will collect my hamper, don't worry.
ठीक है.
okay, so here we go. What was your first ever investment?
I invested based on tip and I lost all my money.
Second, a book on investing that changed your perspective.
Amitabh bhai, over the years, different books have impacted. I'm at a stage in life where I'm realizing that Bhagavad Gita is influencing my investing decision.
Nice. Tea, coffee, or market news? What is the first thing you need in the morning?
First thing, I need meditation. I have
Right.
to keep my head on my shoulder, and meditation helps. Caffeine can come later.
Fair. If you had to compare today's market to a cricket format, Test, ODI, or T20, which one would it be?
The market is always test match. It is the players who want to play it like T20 and one day into it.
Right. Share a dialogue or sing a few lines which reflects the current market situation.
Uh, I mean, in some sense, this might be appropriate. There was a dialogue in Anarkali or Mughal Azam, where King Akbar tells Anarkali, अनारकली सलीम की मोहब्बत तुम्हें मरने नहीं देगी और हम महाबली अकबर तुम्हें जीने नहीं देंगे. Our Anarkali market is stuck between US tariff on one side and our long-term growth potential on the other side. The FPIs are selling because for 1 year markets have given negative return. Other markets have done well. Valuations are at premium end, and earnings growth is in single digit for last 5 quarters. This is the reason why markets are not rising and as FPIs are selling. But everyone knows the long-term growth story of India. From fourth largest economy, it will become third largest economy and should go further higher up. The earnings growth right now is in single digit, but it has potential to be double digit for number of years to come together. The entrepreneurship of Indian is unparalleled in the world. So we are Anarkali market stuck between two opposite forces, and which is why we have moved between 22,000 to 26,000 Nifty over last year or so.
Very nicely summed up. If somebody was to make a Bollywood movie about your life, what would it be called?
When I can't remember who, I can't think anyone who would like to make a movie on a fund manager. But if at all, it should be about how I am a student of the market. So maybe Vidyarthi.
Where the most important economic indicator which you track.
So thumb rule is GST collection growth above nominal GDP growth. Economy is doing well. GST collection growth below nominal GDP growth. Economy is subdued. And right now, economy is subdued because GST collections are growing marginally below nominal GDP growth.
One financial myth people still believe.
रातों रात अमीर हो जाएंगे.
What is the one thing you see Indian investors overlooking?
Their quick money addiction. If you are drug addict, family can figure out, society can figure out. But quick money addiction is like diabetes, a silent killer. I have seen best of the people playing in FNO, Ponzi schemes, lottery, speculation, and losing money, losing their hard-earned money. And these stories don't make headline. But unfortunately, that quick money addiction is the silent disease, taking away financial health of our people.
And the last question in this rapid fire, if you had to give one piece of advice to your daughters, what would it be? A financial advice.
3 advice, actually, not just one, or maybe 4. One, income minus savings equal to expenses should be your motto. No matter what you earn, have the habit of saving. Be a regular investor because bund bund se sagar banega. Think about long term because jaldi ka kaam setan ka. And finally, be a disciplined investor. Don't put all eggs in one basket. Very commonsensical thing, but practiced over decades could guarantee your financial security.
Fair. Now, what we'll do, we'll take a short 2-minute break, and Anulekha, if you can take over. We will come back on the other side with question and answer. And so, people, please keep putting in questions on the chat. And if you, as you come up with any follow-up questions, please feel free to ask, and we will try and answer as many as possible. Anulekha, over to you.
Thanks. Yeah. So, a quick update from our end. Fission Wealth continues to grow with your support. We have been able to add new clients as well as build on wallet share given the turbulent quarter which has gone by. Our recent trip to US showed that there is immense interest from the Indian community there to diversify and build Indian assets. So, Gift City offerings are good avenues to add investment, and we have seen a lot of success there. Of course, quest for higher yield has also led to discussion and traction on a few good options like income plus arbitrage funds, multi-asset funds, the private structured credit space. Each of them offer unique benefits but needs to be balanced with investment goals and risk profile. We have steadily added gold and silver to your portfolio over the last quarter and will continue to do so, as Nilesh Bhai mentioned. We continue to invest in our teams. We are building on our analytics and data management strength within the team. In our knowledge outreach, it includes Amitabh's session with value research on index investing, which has clocked over 1 lakh views. So I hope you had a chance to hear that. Focus on health remains paramount with a healthy walkathon competition happening in office right now with our Gen Z team. So this is the entrance to our office, which keeps motivating us. We have here team members fudging some data, which we update on a daily basis on this number of steps. I think a lot of questions waiting for Nilesh sir. So let's go back into that. Prerna, if you could take the question answer session.
Hello, sir. We all are really excited to have you, and we have a lot of questions for you. Let's just quickly go through it. So, one is like one of clients, they are asking if semiconductor and AI related segments are good for individual stocks or thematic ETF or mutual funds both.
So it's good if it makes money. And whether it's mutual fund, ETF, index fund, or a direct stock, it doesn't matter. Now, please remember that in Indian context, there are very few semiconductor companies. Very few are listed, and a lot are in unlisted. On the AI, again, we have seen some existing company taking steps, and some new companies will get listed. I don't think so. We should narrow down our horizon to just artificial. Many leveraging better than their peers also will be able to create value. So my recommendation is that think semiconductor and AI as an enabler, and any company leveraging it better will be a good investment.
Okay, sir. Thank you. Next is with rupee depreciation every year. So how can an overseas individual investor in the Indian stock market hedge this?
You don't have to hedge. You don't have to hedge. You just have to factor that rupee will depreciate. And you have to invest when including rupee depreciation, the stock market return or an asset class return meets your criteria. For example, you want 8% dollar return, 8 plus 3, 11% return on Indian equity should be good enough. You want 20% return, then you have to invest at a time when 20 plus 3, 23% will be available. So please factor in rupee depreciation in your calculation while making investment in Indian assets. Over last 25 years, if we see, The number one, number two market to deliver return to investors have been India and US. Rest of the countries have come and gone. China last year is up 40%. Korea last year is up 50%. Great performances. But their long-term performances is way below India.
Okay, sir. Next would be, are multi-assets funds a good position for the coming 1 to 3 years?
See, if you're investing with 1 to 3 year horizon, then you should be looking at hybrid funds at best or debt funds. Multi-asset allocation funds are for long term because a large portion of that is equity. And in today's circumstances, investing with 1 to 3 year horizon in equity is not appropriate. You may not get the full potential of equity return by investing with 1 to 3 year horizon. So my recommendation is that look at precious metal, look at debt fund, look at hybrid fund rather than multi-asset allocation with 1 to 3 year horizon.
Okay, sir. And what is your advice on crypto investments?
There's no scientific way to evaluate crypto. It's a high risk, high return gamble. If you feel comfortable taking the risk and losing capital, one should definitely invest in crypto, but in a small quantum. Uh, Whether this will deliver return or not, time will tell. Do remember that 30% of all the bitcoins issued have disappeared because hard drives have crashed, because of passwords have been forgotten. With quantum computing, passwords can be easily hacked. So whatever cryptos you may accumulate one day could disappear if quantum computing does become real. And it is expected to happen in next 12, 18 months. So there are risks involved on crypto, which media is not highlighting. It's just showing how Bitcoin has moved from $1,000 to $1 lakh. Of course, it will go higher also, but will you be able to keep your Bitcoins? So take a risk if you want to in a measured manner.
Sure, sir. And with considering the uncertainty due to, AI and Trump's uh, rulings, so what are your view on large cap IT sector in next coming 2 3 years?
So undoubtedly, large cap IT sector is facing a brunt. Uh, they are facing multiple headwinds. One is artificial intelligence. Now, please do remember that large cap IT companies were in limited sense applying artificial intelligence. They used to write many programs. It used to go to library. And while they had to write a new program, they used to copy codes from that library so that they can fast track the development. They can take advantage of the previous development. Artificial intelligence has now ensured that the whole world becomes your library. Wherever the codes are written, it can capture it and give it to you in an instant. Uh, Second thing which large cap IT companies are facing is volume or growth. They have been largely servicing US companies. US companies themselves are going slow on technology spending as there is uncertainty thanks to tariff. Put both these things together, Indian IT companies have seen that their volume growth has come down. Their margins are intact, but growth is missing. And people are not willing to give them higher valuation because they don't know how long this model will survive. Now, within this IT companies, there are few IT companies which have recognized the future. They are employing IT to take part in enterprise AI related work. Globally, will every company move towards AI? Answer is undoubtedly yes. To leverage AI, you need data. You need to arrange your data. You need to secure your data. That's human work. Once you have arranged data, secured data, and you start leveraging AI, you will need to ensure that the results remain with you and don't leak out. Otherwise, your competitors will make merry of you. So enterprise AI could be a large market, and Indian IT companies are deploying resources over there. Uh, my feeling is that today, large cap IT is a contrast story. They may continue to face burden for some time to come. till such time order flow starts, volume starts growing, and they are able to provide cheaper, better, faster solutions to customers compared to their peers. So I will say this is time to catch a falling knife and accumulate IT stocks which are leveraging AI to deliver cheaper, better, faster solutions to their customers.
Okay, right, sir. So, on your view of AI, so how do you think AI is going to impact the investment decision making in near future?
So undoubtedly, we have to leverage AI. There's no doubt about it. A machine will be able to analyze details far better than a human being. But please remember, machine needs to be feed data. The hallucination of machine will need to be removed. Their outcome will have to be validated. Very recently, I read an interesting research report where someone in Western world took portfolio of investors, a portfolio of a fund over many years, and just adjusting the weights in those portfolio, they were able to generate 6% additional return. It was a very interesting research, so I reached out to the person, and my biggest worry was that was AI taking decision based on hindsight? Of course, now you know what the prices are every quarter end. And based on that, if you are adjusting weights, that's not fair. But he assured me that no. We ensured that AI was taking this balancing decision based on information available up to that particular date. It didn't look at the prices beyond that date. I was quite satisfied and willing to explore further. But you always take second opinion. So reached out to a friend who is a reasonably good expert on AI. And he did say that, look, Nilesh, I don't doubt this gentleman's research of not using price data. But I doubt if he would have restricted access of AI to the past events. So while the data of price was not available, but events were available to AI, and hence it was able to adjust the weights more better than the fund manager. And thereafter, we gave up on that. So undoubtedly, I know I have to leverage AI, but it will be combination of AI and human intelligence together. I'm not just going to give my portfolio to AI and let it decide what I should buy and I should sell. That may prove to be a disaster.
Sure, sir. Uh, the next question which comes up is like, what, what is the best way to to go global in the current market situation? And how can we diversify internationally, say like 5 to 10% of allocation?
So there are
So what
many
are your
mutual
thoughts?
funds available. Exposure to index like S&P 500, or it gives exposure to a sector like global technology fund, or it gives exposure to country like S&P 500 in US, Chinese equity. So there are multiple options available in India for global investment. Some of these funds are open, some of these funds are shut. But if you know the underlying funds, you can also leverage it via $250,000 LRS limit through interactive broker or such kind of vehicle. You will be able to buy similar funds in offshore. You can also go and buy stocks if you want through such kind of platform. So where there is a will, there is a way. Today, it is legally allowed to take $250,000 per individual abroad and invest in underlying funds or stocks.
There's a
Sure,
question,
sir.
and Prerna, before I just wanted to give a
Yeah,
feedback. One of the feedback we have received is that Anurag has said that he loves the opening comments about our cultural roots, Nilesh Bhai, and he asked a follow-up question based on that. Indians have an aversion to consumption for whatever historical reasons. Do you think this is changing across income segments and not just HNI? How much should we index on consumption patterns changing?
So very, very important point, Anurag bhai. And change is happening at both ends. One is, as my basic need of roti kapda makan has been completed, I'm spending towards experiences. Like in my childhood, vacation meant going to mama's home. Today, if I tell my daughter that let's go to mama's house for a holiday, she'll probably burst out. Holiday, international travel, 150,000 mobile phone. Those were not part of our consumption, but as our income level has increased, we have moved into that orbit. The second thing is consumption, looking at the future potential. Uh, I don't remember ever running an overdraft in credit card. I do use credit card, but that's for convenience, never for preponing my consumption. But I know so many young people who are running on credit card. They don't mind paying 20-30% interest rates, but spending money. They believe in future they will earn and they'll be able to pay off credit card debt. So the consumption which is linked to your income, as income goes up, you move from necessities to comfort and comfort to luxury. That's a good trend visible. There is also a leverage consumption trend visible. Now, I'm a conservative person, old thought person, and which is why my advice to my daughter was income minus saving equal to expenses. Many people believe expenses should be income plus credit card. That's not good according to my limited point.
Okay, sir. We have question on IT sector again. So, what's the near future of Indian IT, such as persistent systems? Is IT outsourcing going to be targeted next by US?
It's difficult to predict Mr. Trump. Sometimes I believe he's behaving like president of China rather than president of United States of America. So let's forget about what President Trump can do because that's beyond our scope to predict. What our IT companies can do, rupee has depreciated 10 to 12% against euro, GBP, and Chinese renminbi. Can we create product for European Union? And we are already present there. It's not that we are not there. But whole of Europe is not English speaking. There are Spanish, Portuguese, German, Italian, multiple languages just like India. With artificial intelligence, we'll be able to overcome language barrier. And undoubtedly, European community is not as dynamic as US community. So if we can go and service American consumers, American buyers, it should be possible in Europe also. And currency now favors you. Can you focus on developing European Union, which combined is as big as United States of America, and maintain growth? Second, our IT companies, for variety of reason, have not invested in product. Today, government is encouraging Swadeshi. Is it possible for you to create products which can replace Western world? Can we create an Indian WhatsApp? Can we create an Indian window? When we created UPI or Aadhaar, it became globally the best product. Can we take that innovation further in creating products which can go and replace Western domination? Zoho has developed and launched a couple of such products. Can that tribe be increased? So you will be able to provide a cheaper, better solution to replace US Mac 7 dominated products. Third, AI is like a highway. ChatGPT, Gemini, Grok. There are many LLMs now. Could we create a deep seek kind of LLM? While China claimed it was $5 million, everyone knew it was propaganda. Maybe we can create an LLM like that. How many of us has heard about a company called Luna? When I ask people about Luna, they talk about TVS Moped, TVS Luna. But there is a startup in India which in about $1 million created AI voice, which is one of the best in the world, and it delivers performance better than OpenAI's AI voice. We need Luna kind of startup mentality to create Indian version, Indian owned version, which are cheaper, better, and faster. About 10 days ago, if you had asked me, my answer would have been, बस वो तो खाली चाइनीज ही कर सकते हैं, हम कहाँ से करेंगे? But that was my ignorance. Luna is working, and you can search how they've created synthetic voices which are so natural, which are so responding to the command. So, a limited point, there are multiple opportunities. When our back is to the corner, we generally fire. So hopefully Trump tariff has lit fire on our backside and will run now.
Yes, sir. Next would be on gold. So, what's your view on jewelry retailers like Titan, PNG, Kalyan Jewelers, considering increase in gold prices and drop in diamond prices due to lab-grown diamonds?
So in the jewelry retailing business, we believe growth will get impacted. The grammage will come down and value will go up because of the prices. And jewelers which are into, let's say, instead of 24 karat jewelry, into 14 or 18 karat jewelry, which are into heavy studded jewelry versus what a working woman will wear kind of jewelry which is more going to old generation versus jewelry which is going to the young generation. They should be able to do better. I can't give stock specific comments, but by and large, we have been underweight jewelry retailing sector.
We are almost near the end of time, so we'll ask a few questions and see if. So there are two kinds of questions which are also there, and questions are continuing to come in. One is where Vijay Thakral is asking, what sectors would you be bullish on in the coming 12 to 18 months? And similarly, Rakesh Ranjan has asked, what are the top sectors where one should cut exposure? So I think I'm kind of clubbing them together in the interest of time.
So Amitabh, by 12 to 18 months, while I'll answer that question, but you don't invest with 12 to 18 month horizon.
Absolutely.
I want you to invest with 5-year horizon. The consumer discretionary space I talked about, more money in the pockets of consumers, borrowers, taxpayers, government employees. Undoubtedly, consumer discretionary space will do well. The second space where we remain bullish is more, let's say, quote unquote, innovative economy. Now, innovation can be done by an old economy company. It can be done by a new economy company. The market is likely to reward innovation. Market is likely to reward disruption. A company like Zomato, which is 10-year-old, delivers more market cap and return than an established warhorse like Tata Motors or Hindalco. So we will be looking to innovation and disruption in our portfolio of companies to put our bet upon it. and it's available in a wide range. Auto component company which is so good on quality that when Toyota moves out to outsource an engineering component first time in their history, it founds this company appropriate. An alloy mixing company is so good that when Mitsubishi wants next generation turbine, they found this guy's metal applicable and appropriate. A machinery manufacturer which strips CNC machine to deliver cost effective as well as quality appropriate machine at cheaper price should do well. A defense manufacturer which is able to build capacity, cater to local and global market, and deliver cutting edge solution should do well. So if I have to answer this question in one single line, we would like to invest in companies which are disrupting, which are innovative, and which are not like dinosaur across all the sectors. And we will avoid those companies which are becoming like dinosaur, so bureaucratic, so large that they don't realize their tail is on the fire. One quality we would like to see in our management is paranoid. Only paranoid will survive.
So, Nilesh bhai, if you have 2-3 minutes more, then I'll ask one or two
Sure.
more questions. Dharmveer, you wanted to ask a question. I didn't get the full question, so if you could unmute and ask yourself.
Thank you. Thank you. And thank you, Nilesh Bhai. It's been a revelation listening to you. Uh, this is more specific to me. I'm being selfish. I want to take this opportunity. I am a retired banker enjoying my retired life. And courtesy Mr. Verma, I have placed my funds with him, with Fission Wealth. But to be in the interest of time, whilst very positive about India, but I'm 62. I'm looking for a healthy lifestyle, and all that what you said resonates very well from a long-term perspective. But we are in the midst, and especially India and the world is in the midst of huge turmoil, and underlying issues in India are tremendous. In the interest of time, I don't want to debate on that, but I just want your outlook and view that you see we've got a skill set mismatch. We've got infrastructure in issues. We've got, whilst GST is certainly a very and what the government has done now is really proactive, and they needed to do it. And as you said, the back is pushed to the wall. We had to do it. But my question again is, I wonder if really real income is going up or not. We may temporarily give a lot of money in people's hand, but because capital investment has really not happened in the industry side. It's the government which is pumping in money. In terms of disruption, it is so massive. And also, as you said, you don't want dinosaurs across industries. So agility and being nimble is something which is the call of the hour. And I wonder if India is equipped because the disruption is so massive and so fast. How do you think we are going to cope up with this, and what is going to be the stress? And and I'm again from a very selfish perspective, for someone like me at my age, looking for a reasonable return of interest, which I've placed my faith and trust wholly into Mr. Verma's company. But I just want your perspective on the other side, which I would like to hear your thoughts.
So undoubtedly, India is a bundle of contradiction. In BKC, when someone comes very bearish on India, I just open curtains of my one side of window and show them Geo World Center and tell them that by world's most expensive wedding happened over there, and your country's HNI were all dancing in the Bharat. I saw them dancing. So don't be so bearish on India. Now, occasionally, we people who are more bullish on India than us, we need to bring them on ground. So we take them to the other side of the terrace and show them sprawling Dharavi. And we said, Dekh bhai, India mein Dharavi bhi hai. So don't be so bullish. in 1 kilometer radius, I am able to convince a person to be bearish as well as bullish on India, because we are a bundle of contradiction. We have our limitation, we have our fault lines, we have our challenges. And despite that, we are growing. It's not that the other countries don't have challenges. For example, many of us dream to be in US. And I asked my colleague who is based in US, what is his biggest risk? And he replied, Nilesh, my biggest risk to me is I am sending my daughter to school. I don't know what she will return as, a daughter or a son or something else. Those are the risks we don't have to worry about. Now, grass is always greener on the other side. We have our challenges undoubtedly, and which is why we have to be realist. A pessimist always sounds intelligent, but optimist makes money. I would like to modify that, saying that both optimist and pessimist sounds intelligent, but only realist makes money.
Yes.
So you are in safe hands of Amitabh and Anulekha. There will be volatility. I don't have to explain to the banker about it. There will be ups and downs. In the darkest of time, don't lose hope. In the best of the time, don't become greedy. We will always mean revert.
So one last question, and I know we have taken more time than we had asked you for, is as the questions continue to come in, we didn't cover real estate at all, and there are questions which are also there on your outlook on real estate, and we will continue to take the questions, and I'll share it with sir in the later, and whatever is the responses we'll share back with you. But the last question, Nilesh bhai.
Real estate, Amitabh Bhai, is all about location, location, location. And there are multiple trends. One trend is that whenever there is a change in the state government from opposition to ruling and vice versa, the real estate goes and crashes. Why does that happen? Because real estate is the biggest financier and supporter for the government. Whenever government changes hand, they try to bring down real estate prices so that earlier government supporter loses and their supporters can make money. So there is one governance cycle. The second one is development cycle. The core of city, like in Mumbai's case, the core was Fort, Kalbadevi Road, Girgaon, Charni Road, Dadar, and stuff like that. That will get crowded. That will fail to accommodate aspirations of people. And hence there will be movement out of that area towards area which gives better infrastructure. At one point of time, Bhuleshwar was must go for shopping. Today, Linking Road is must go for shopping, and tomorrow, who knows what else will become must go for shopping. As the city shifts, attraction will shift and prices will move. The third thing is within location opportunity. I mean, today we are seeing democratization of real estate price. A top-end product in Borivali is going at 35 or 40 or 50,000 rupees a square foot. In Andheri also you could get it. In the towns, you could get it at that price. No longer are the point was expensive, Pedder Road was expensive, Bandra was cheaper, Lower Parel was cheaper, Andheri was even more cheaper, Borivali was even more cheaper. So real estate cycle has multiple factors at play. My only recommendation will be that many of us prefer rental income. Do consider REIT and InvIT as an alternative to rental income. To manage property, to pay maintenance, to pay upkeep for repairs and maintenance, to deal with tenant, it's not an easy thing. And especially if your next generation is in different town, different country, they will find it a nightmare. Instead of praising parents for giving them inheritance, they will curse ki mata pita kahan pe fasa ke gaye hain. So to that extent, REIT InvIT will be an appropriate thing. Should your portfolio carry, apart from equity mutual funds and fixed income funds, AIF, SIF, and REIT InvIT? Answer is undoubtedly yes.
Great. Thanks a lot, Nilesh bhai. I don't think
Nilesh bhai, any song that comes to your mind with the current state of the market?
रात भर का मेहमा है अंधेरा, किसके रोके रुका है सवेरा. It's always darkest before the dawn. But if Indians work hard, ट्रम्प के 3 साल भी निकल जाएंगे.
Thank you.
Thanks a lot, Nilesh
Thank you.
bhai. The questions will not end wherever, if you are in a session. I've got lots of messages on my phone as well on the chat here where they really like the session. So thanks a lot for taking out the time.
Thank you.
Thanks everybody for joining in today. I know it was a Saturday. It was the midst of a lot of puja celebrations and the Navratri which is going on. So wish you a great festival ahead. And thanks a lot. Thanks, Nilesh bhai.
Thank
Thank
you.
you. Happy Navratri to everyone.
Thank you.
Thank
Thank
you.
you.